Hello everyone, it's Evan here from the Trade Risk, and this is your stock market weekly update for Friday, November 17th. Let's get right into it here with small cap stocks. That's making the top of our list. We're going to talk about that in this week's video. If you recall, the Russell 2000 2 weeks ago, up over 7%, 7.5%, one of the biggest 1 week moves for that index in a very long time. It occurred right at a very significant spot at the bottom of a multi-year range, kind of had that failed breakdown all associated with it. Last week, they took a breather. This week, right back into rally mode. Heavy volume. Looks good for the small caps coming off of the bottom end of that range. We're going to look at charts in just a little bit. 10-year yield down to 4.44%. If you recall, just a few weeks ago, seems like yesterday, we were talking about 5% or higher for the 10-year, and now we're down to sub 4.5. That's good. Markets like that. Investors also happy with the recent inflation data. CPI coming out this week on Wednesday. We're looking at about 3.2%, or I think core was coming in around 4%. Seemed to be kind of lower than market expectations. Market liking that. That kind of sparked, this U.S. dollar sort of breakdown, rollover that's occurring here. All of these things, of course, going hand in hand between yields, equity market performance, inflation data. And we're going to also talk about gold and silver. Got some interesting long-term patterns happening there. And, of course, markets going to be short week next week for the U.S. Thanksgiving holiday. Happy Thanksgiving early to everyone celebrating. And now let's get into some charts. Stick around. All right, we are back here. We've got some charts in front of us, but before we get into them, I do want to bring your attention to a Black Friday sale that we are having here at the Trade Risk, kicking off next week on Monday. It's going to be lasting for one entire week from the 20th to the 27th. Everything in our store, except for custom coding and some one-on-one consulting time, everything in our store is going to be up to 40% off. This is the one sale that we run per year. We never usually do any discounts in between. It's this time only. So take advantage of it while it's here. Again, you guys and gals always hear me talk about the TC2000 products we have in our store. So if you are a platform user, no brainer to take advantage of some of the custom indicator stock scans, layouts, and all the things that we have built for the platform at this time. We also have our TR150 watch list, which I still think is one of the best values that we offer here. It's a one-time purchase for lifetime access to a weekly curated list of stocks. Most of these stocks are under the radar names. They're not just, the Magnificent Seven. There are plenty of names here that probably are harder to find. And of course, we have our trading systems, Merlin and Lamerick. Merlin, let's just be honest here, has been very out of sync with the market this year. It is in a drawdown, and personally, I still have lots of good things to think about this trading system in the years to come, but it's out of sync right now. And generally speaking, this is when everyone wants to turn away from a trading system. Obviously, I can't guarantee any type of returns or say anything about it. Read more about these trading systems, see if they're right fit for you. Lamerick here has been doing pretty well this year. I'm very happy with that. And all of this is on sale. So take advantage of it. Next week, you jump on our newsletter. If you're not there, you can get access directly to some of the promotions, but it'll be kicking off on Monday, the 20th. So hopefully that helps. And let's get into some charts now. So if we take a look here at performance, again, top of the list, most impressive move here. Outperformance move is coming out of the Russell 2000 of 5.45%. But again, S&P, Nasdaq, Dow Jones, all up about 2% this week. So once again, third week in a row, just continues to pressure up and to push up and really, again, make some more believers out of this market rally. If we look at volatility, both down this week. So VIX really not falling too much though. So it's hanging out just under 14. Nasdaq volatility in the high teens, 17 spots spot 5. And again, both of those lower on the week. If we take a look at sectors here and looking at what drove performance, it's definitely a different mix this week. So it's been tech that has really been leading to the upside. And this week, we really got some gains out of the real estate sector, materials, and then consumer discretionary. So a little bit of a changing of the guard there that was working to the upside. Utilities, financials were also in the 4th and 5th spot. If we look to the underperformers this week, again, everything was green. Consumer staples, energy, and healthcare, those were your bottom 3. And then again, you can see technology up 1.83%. Nobody's going to complain really about that, but certainly in the bottom end of the pack this week after, again, an impressive 9.62% move over the past 1 month. So nice to see all sectors here in the green this week. If we take a look at our trends on a sector basis, so this is our custom smart trend filter that's measuring price and volume spanning across time. And again, you can see most things here are pretty constructive. Most things entered an uptrend a few weeks ago. We talked about them in our past videos. You still have energy, which is in a bit of a tough spot. You still have biotech, which is trying to transition up, but pretty much everything else has transitioned over the past couple of weeks now and is in a daily chart uptrend on this indicator. If we take a look at market breadth, we are finally starting to see a little bit of improvement here, looking at, say, the number of stocks hitting a 52-week high versus those that are hitting 52-week lows. You can finally see that on this particular reading here in TC2000, we're getting back up into the 100s, 200 stocks or so, making 52-week highs. A little bit of expansion. You can see just these taller bars starting to get printed here. Took a long time. I mean, I tweeted this out earlier this week, but I think on day 6, 7, 8, 9 of this rally, this fierce rally, that we were still getting more stocks making 52-week lows. And it's not until just the kind of the second half of this week where we started to really pick up here and started to see breadth improve. That goes hand in hand with that Russell 2000 sort of outperformance that we talked about. If we look down here, you can see the number of stocks hitting 52-week lows starting to dry up as well. So that's some good, just under the hood sort of strength that you like to see in this market. Meanwhile, if we look at some other breadth measures here, and we put the percentage of stocks over a 50 SMA, this has been screaming higher. Remember weeks ago, last month, when we were talking about this here in the kind of the lower bottom percentile, 10-15% of stocks were above their 50 SMA. Well, now we've got 68%. So we're getting all the way up to not quite where we would say it's maybe overbought or in an extreme territory, but we're certainly marching up there at a pretty fast rate. If we look at the longer term 200 SMA, you can see again, nice kind of V-shaped move from the lower bounds of sub 20% of stocks above their 200 SMA now to about 45%, but there's still a much longer path here. Again, this is a slower sort of measure of breadth and internals, but it's still clearly marching higher in the right direction. So there's more kind of confirmation under the hood, maybe some broadening out of this market that we are seeing right now pick up this week. Now, if we move on to Investors Business Daily, so shout out to IBD. They are a sponsor of the show, and this is their IBD 50. I'm looking at the top 10 of their IBD 50 here, and you can see a couple of new names on the list, but most have stayed on since last week, and you can see pretty much having a very strong week as well if we look at the 1 week returns. So we've got some big kind of performers here. DraftKings at the top. Seeing some familiar names. So if you want access to this list, check out the link in the description of this video. You can support the show, support them with that link in the description of this YouTube video. Let's move on to commodities here. And you can see at the top of the list, we've got silver, 7%, not too shabby at all for silver. We're going to look at some longer term charts here, but this is starting to suddenly emerge and shape up here in some of these broader patterns. We had copper, gold also doing well this week. DBA kind of eking out some small gains. But then when it comes to the dollar, when it comes to natural gas, still having some tough time. I'm sorry, oil and natural gas having some tough times. And of course, the big story this week at the top 5 that we talked about at the top of the show was the dollar rollover here. If we take a look at the UUP smart trend filter, you can see that it has entered a bearish uptrend here, a bearish downtrend, and this really started, first got picked up here on the 6th of November. So this was not necessarily a new trend. We got that first kind of confirmation of a downtrend emerging. We went neutral for a little bit, and now we're back to printing some bearish signals here for the dollar. So it's had a great run this year, second half, August, September, October particularly, but now it's starting to give back some of those gains. And now if we finalize here with treasury yields, you can see more kind of breakdowns in progress, more trend reversal confirmation in progress. We talked about this at the top of the show, the 10-year treasury yield back down sub 4.5. That is, of course, a lot lower than the 5% everyone was looking at and drooling over a few weeks ago. So nice to see these yields continue to break down here, and generally speaking, going hand in hand with all that inflation data that we are continue to chew on and Fed expectations. So let's now move into our price charts here. We've got the S&P 500, third straight beautiful week of gains here. This is a weekly chart. Each bar represents 1 week of trading, and it's been a V-shaped, ferocious as they've come rally here. We've covered pretty much in a straight line, or straight as they come, 10% in the last 3 weeks. If we go down to a daily chart here, you can see we have spent the last few days kind of digesting, hanging out just over this 4,500 zone. This is more or less where we consolidated in September before we ended up kind of breaking down. And again, you can see that we haven't quite got back up to the July highs just yet in the S&P 500, but we have certainly marched a heck of a lot closer to them. So for the S&P 500, again, you're just getting a tremendous amount of inertia here, some momentum to the upside. It's not letting up. You can see the MACD on the top of my chart continues to make new highs here as well. So lots of sort of chasing, lots of these open gaps. Look at all of these gaps that are getting left behind here that are not getting filled. We're gapping up, and then we're just pushing higher throughout the day. You're seeing it in consecutive days here over the past week or two, and this is just showing the continued strength out here in markets. Eventually this has to slow down, and maybe it's next week, but for now, bulls continue to really just kind of push this market up, and it's really forcing folks to kind of chase and choose to chase or stay sidelined and wait for a pullback, which just hasn't come just yet. So in terms of big levels, really not any change. I mean, 4,600, which was the cycle highs back in July, year-to-date highs as well, that continues to be kind of the big reference point, maybe magnet that we can look at for the market. But you can also see things just slowing down here again, right at these August highs where we kind of topped out and consolidated just several months ago. So that's the S&P 500. Not really any change here. Again, it's stretched in the short term for sure. I don't necessarily see any advantageous sort of reward to risk ratios buying new positions at these levels, but shorting it is just as equally of a difficult proposition to make. We are overbought on lots of metrics, but that in itself is not usually a reason to short anything by itself. If we take a look at the Nasdaq 100, you've got a slightly different story here. Again, you've got these big gaps, just like we talked about, that the market continues to kind of keep open. They're not filling, continuing to stack more of them. That shows urgency, that shows demand, that shows offsides positioning, however you want to think about it. But we continue to see kind of this nice melt up happen, and we are in the Nasdaq 100 back to the July highs. So we arrived at this destination a little bit earlier than, say, the S&P 500. That you can see that the Qs are basically pausing and taking a little bit of a breather right here. This is exactly where we topped out in July. So it'll be interesting to see, if we can push through this level. And as soon as we do, you really don't have that much distance back all the way to 2021 when we were making all-time highs up here around 406 in the Qs. That would put us, if we start pushing through this next week, we're basically within 5% of all-time highs for the Nasdaq 100. So quite the recovery turnaround story happening here in the Qs. And for the Russell 2000, again, our big story of the week. Let's go to a weekly chart here. Again, 2 weeks ago, we had this big 7.57% push up, and that was following a breakdown effectively, or a test, or a slight new low here made in the Russell 2000. This was a multi-year low made, coming right back at this area. We talked about it on this week, rewind the tape 4 weeks ago, and we even, isolated this opportunity of just be careful, be wary of the false breakdown and V-shaped move. If we started to reclaim over 165, 168, I think we were kind of using that band. If we can get back above there, you could get a quick failed breakdown move and a swift move in the other direction, and boy, you're getting it now. Certainly didn't predict it, but we just said, let's keep an open mind about it, and you're getting that now. What I like about this move is last week, frankly, is we did get a little bit of a kind of another shakeout last week, right? So the folks that maybe were jumping back into the Russell 2000 short, that were saying, okay, that 7% move was way too fast, way too much, time to roll over and go, kind of really break down now. That move failed, right? That trade failed for the shorts coming back into the Russell 2000. It turned into a higher low. We made a higher high, and now we have a series of higher highs and higher lows in place here in the Russell 2000 on a daily time frame, and it could still squeeze quite a bit more to get back up into the top end of this range. So nice move here for the Russell 2000. Big volume coming in. Again, it's covered a lot of ground. Not saying it's an easy established new position right here, but you certainly know where you're wrong in the Russell 2000. You certainly know where you can measure and manage risk against, and that's this multi-year range at the lows here, sub 168 or so. So that is really the price action across the majors. I wanted to look at really briefly here, and again, I know some people get frustrated looking at monthly charts. It's still 3 weeks out, or we're still middle of the month looking at a monthly chart. But again, just to illustrate sort of the cues here, we were down 3 months in a row, and really mostly kind of sideways to down 3 months in a row. And even though this market has been on just an absolute monster move here over the past 2 weeks, up 10% for the month so far, you can see that we're just kind of coming back here. And when you zoom out, and if you were looking at this chart on a daily time frame or an hourly time frame, I mean, this looks like a very bullish potential continuation pattern here in this broader uptrend, in this broader structure. And this is a monthly chart. So this just shows how much we have the potential to move and squeeze and push here and trend here into a longer term time frame. Again, this is not going to happen in a straight line. I'm not saying we're just off to the races here. Here comes 500 for the Qs, but it certainly just gives you that bigger picture perspective. When you're stuck on these daily charts all the time, it's good to zoom out and just see the big picture. Same thing with the S&P 500. Again, 3 months down in a row, we checked back to some bigger levels around 4,100. We held them, and now we're starting to launch higher in what could just be a continuation pattern in this overall kind of uptrend structure. So just some food for thought there. Let's take a look at some other markets now. Actually, I want to go to gold, because I also wanted to look at the longer term charts here. I want to just look at a weekly chart. I think that suffices. Gold, again, to start off October, really saw that sharp move. 10% seems to be the magic number, but it covered about 10% in 3 weeks. And now it pulled back for 2 weeks, and here it goes off to the races again. I just don't want to lose sight of this structure here, because again, this looks like a chart that could really start to move and break out as well, particularly if this dollar breakdown really gets going. So if you see, as we got this week, a big breakdown here in the dollar, heavier volume coming in, then that could certainly help fuel certainly a lot of these commodity prices like gold. And if we start moving over 187 or so, which is really just a couple of percent away in gold, you have some very significant breakouts. And the same thing with silver. Silver was a big week this week, up 7%, bullish engulfing bar, bullish engulfing over the last 3 weeks, frankly. And again, you can see that for you, maybe chart pattern types, I'm not really a chart pattern person per se, but you've got your, kind of inverted, or your, however you want to look at this structure here, and you've got your neckline maybe all the way up here. So you start looking at some of these bigger formations in silver. If it, again, it's not going to happen in a straight line, but if you start taking out 23, 24, you can start to get some very big projected moves over the next, 3, 4, 5 quarters, let's say. Again, big picture, lots of big picture talking happening here. It's not quite the end of the year, but wanted to at least bring it to everybody's attention. What else did I want to talk about today in terms of sectors? Keep it short here. Oil starting to turn around a little bit. This is the 4th week down in a row for oil. Again, I think if bulls want to hold the line, this is a great spot to do it. You can see some tails forming here, but finished the week strong with this 4% move on Friday. That was nice to see, but still in a short-term downtrend. So oil is there, and natural gas just cannot catch a break here. It is back to the low end of the range, back to potentially making new lows, especially if you look at this on the futures pricing. I don't know if this technically made new lows, but certainly got close. Oversold in the short term, bigger volume coming in as it comes back down to the lower end of this range. Could be interesting, but natural gas is always a very, very tricky one to trade. So that, I think, is about it. I'll leave it there. I'll switch over to our industry scans here. So here's some industries and sectors that are coming up on some of our custom scans. Again, this layout is available in our TC2000 store. You can take a look at some of these that are showing up notable, and I will end it there. So as always, hopefully you enjoy. Hopefully everybody has a wonderful, safe travel holiday if you are traveling during this time of year. Hopefully it's smooth as ever, and always a tough time to travel, I know from experience. And don't forget about the Black Friday sale that we're going to be kicking off on Monday. So check out our site, check out our website, see if there's any shopping you would like to do. Now is the time. If you have any questions, then please reach out, contact us on the website. We're usually pretty fast to respond. So that is it for me. Thank you as always for tuning in, and we should be back maybe with a little short holiday special next week. If there is a chance, because I do have a little bit of traveling to do, then we'll see you back here in December. But take care, everybody. Have a great holiday, and we'll see you in the next video update. Take care.